The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. S&P 500 now down almost 24 points. Let's take a look and see what's going on with the bond markets. The 10-year Treasury down 7 basis points. 3.725 is the yield on that 10-year Treasury. Mortgage-backed securities are up by 8 basis points, means interest rates are down ever so slightly. And OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. Let's take a look and see what the loans locked at yesterday. 30-year conforming loan, 6.621. The jumbo loan, 6.72. FHA, 6.521. USDA, generally no down payment in the rural areas of our country, 6.507. And the best loan on the market for those that earned it. That'd be the 30-year VA loan, 6.424. The question becomes, why are these numbers the way they are? Well, once again, I'm going to tell you to be very, very careful where you get your news, because sometimes it can be very, very, what's the word? Lying. Diana Olick, get it straight. You know, I talk about her all the time because she's the CNBC reporter and that talks about real estate. And I'm hoping at some point in time I can say that Diana Olick got something correct. We haven't got there yet, but I'm hoping that at some point we may get to something like that.
Such an idiot.
Yeah, she is.
Such
exactly.
An idiot.
So the MBA released their mortgage application data for last week, showing purchases rose 4% last week and are down 46% year over year. Interest rates declined from 7.14 to 6.9, according to the Mortgage Bankers Association. So roughly down a quarter. But, you know, rates can be skewed by points. Last year at this time, rates were roughly 3.2%, which means they're 3.7 higher at 6.9. Refinances fell 2% last week and are down 88%. So Diana Olick, so she says, sharp drop in mortgage rates does little to boost demand. And of course, the media has to do their best to grab the headline. But while we did see a big drop in rates, it came on Thursday after the CPI report, and Friday was a holiday. No loans, none of the locking was done on Friday. You know, some companies do lock on the weekends, but for the most part, those are the ones that are hedging. You're not going to get your best rates on the weekends or on holidays, so be careful of doing that. But Olick doesn't mention the fact that this was some of the highest weekly activity we've seen in a long, long time, and it was done in a short week. Think about that. So, yeah, technically, maybe she's correct that it didn't have a huge impact, but let's put it in context, Miss Olick. Get it right. You know, if you're going to share information, share the whole story, not just what you think is going to sell more newspapers or advertising. Retail sales rose 1.3% in October, which was stronger than estimates of 1%. Core retail sales rose 0.7%, which was more than double expectations. The previous report for September was also revised higher by 0.2%. So far, the consumer is hanging in there, but they are likely using credit, as there are several reports that outstanding credit card debt has climbed to record highs. Consumers could also be making different choices. Walmart reported that 75% of grocery market sale gains came from individuals earning over $100,000 per year. It appears even those earning more compared to the median are moving away from more expensive stores like Whole Paycheck. So just a thought right there. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.